Hey YouTube, Chris Quinaris here with another episode of Crypto Decrypted. The markets are down, inflation is high, so today we're talking all about market cycles.
Crypto Decrypted.
Now, before we dive on into today's episode, I do want to remind y'all that if this is your first time coming to the channel, how about you do us a favor and go hit that subscribe button? It really would help us out. Of course, if you enjoyed today's content, don't forget to leave a like as well. But let's move on. Now, what exactly are we talking about? Well, there are four main things I want to talk about, and don't worry, it won't take too long. The first two you've probably heard about, and those are bull markets and bear markets. Those more specifically refer to the markets. Stock markets, crypto markets, commodities, right? It's more specific. But the latter two are actually about the economy as a whole, and these are typically phases in the economic cycle. These are called booms and recessions. Without further ado, let's jump right on in and start things off with the bull markets. So generally speaking, a bull market is just a market period where prices are rising or are expected to rise. With a bull market, typically you're going to see something along the lines of a 20% gain in price or value of investments, following periods of 20% losses or more. Okay, so consecutive periods where that happens. You're also going to see higher GDP, lower unemployment, and a higher demand than there is supply for investment opportunities. And we'll get into a little bit about why that's important later. Up next, we have bear markets. Now, bear market is the antithesis to bull markets, okay? So this is typically a period where prices are falling or are expected to fall. And like a bull market, typically these are actually going to be periods where you see things like 20% losses in the value of investments or in the markets as a whole. You're also going to see lower GDP, maybe layoffs, higher unemployment, etc. And don't forget, there's going to be a lot of negative sentiment from both investors and consumers. Now, those were two market phases, right? Or I guess states of the market. But what we're talking about next is actually from economics, okay? So this concerns the overall economic cycles that all economies go through. And these are booms, so economic growth, generally speaking, and recessions, or the shrinking of economies. Up first, we're going to be talking about boom. So generally speaking, an economic boom is going to be a period where there is increased GDP growth, higher worker productivity, which leads to higher business profits, okay? And that higher worker productivity really means that there's the similar amount of workers, and they're working the same amount, but they're actually producing a lot more. That's really just what productivity. And there's some signs of this, right? First and foremost, you're going to see a lot more discretionary spending on things like luxuries. People won't be necessarily living as tightly or as paycheck to paycheck anymore. So you may see people take more vacations, buying a new car, things of that nature. What you also may see, and this is what I was talking about with the bull markets, right? Where there's a high demand for investment opportunities, but a lower supply. So people are going to start to essentially create these opportunities on their own, and they may not be sound opportunities. As a result, these can create what are called bubbles. And if a bubble bursts, that's bad and can lead to the next market cycle, known as a recession. And so a recession, like I was saying, typically does follow a bust in a boom phase of the economy. And this is just generally speaking a period of declining economic performance and productivity that lasts at least a few months. And in recessions, you're typically going to see declining value in a lot of different investment vehicles. So stocks, commodities, real estate, as well as higher amounts of debt because maybe people have a lot of money in investments, and because of the declining value, they can no longer pay back their debts. But that's going to wrap things up here today, guys. I hope that was helpful for you, just so you can understand a little more about what is going on in the world right now. Very bare bones, but I wanted to make it short and easy to understand. So, as you guys know here on Crypto Decrypted, I've been trying to help you guys learn about a lot of the basics that make up the crypto and blockchain world. Going forward, we're going to be looking a little more at the specific financial impact of some of these technologies, right? So, what actually makes Bitcoin worth money, and what are some of the characteristics of it that you may want to look for in other investment opportunities? Not to say that the next video is on Bitcoin, as we've done one already, but that's just an example of what you guys can expect. But that's going to wrap things up today, guys. Hope you enjoyed today's content. And if you do, don't forget to leave a like and subscribe. And of course, if you have any questions, feel free to leave those in the comments below. But until next Thursday, I'm Chris Cornaros, and this has been another episode of Crypto Decrypted. I hope y'all stay cryptocurrent.